Hey everybody, Nick here at Chipstock Investor. Just me today. Casey and I had a scheduling conflict, so this video is going to lack some of the dry humor it typically has. Sorry about that. But let's just jump right into this here. We're going to talk about a company we've discussed before, BE Semiconductor, based out of the Netherlands, and some of the impact that the AI and accelerated computing market is having on chip manufacturing and how this is helping lead to some big changes and a heat up in semiconductor manufacturing probably later this year. Here's a high level overview of BE Semi and where they're at right now. Thanks to our friends over at finchat.io for this chart and lots of the other charts that you'll see throughout this video. They are the sponsor today. Check them out. We use FinChat every day to do research in industries and into companies like BESI. And if you use our link in the description below, you can get 15% off any paid plan. Check them out, finchat.io. So the reason why we want to talk about BE Semi though today is last week they just had a capital markets day, an investor day update. And of course, the financial targets changed through 2030. They provided a big increase to their projections over the next 5 years. And so we'll get into that. But more relevant than that is some of the discussion they had, an explanation they had about how AI and accelerated computing is really just still at the beginning of completely changing how semiconductors are manufactured. Speaking of BESI's Investor Day update, we've been talking about this over on Semiconductor Insider. Over on Semi Insider, you get access to all of our research and discussion about it with our community of like-minded, long-term focused, research-driven investors. We, of course, talk about a lot of other things besides just semiconductors and chip stocks. Talk about all things AI and technology in general, as well as general investing topics like how to allocate your portfolio properly. Check us out, Semi Insider, just $10 a month if paid annually. Link in the description below. Hope to see you all over there. Let's do an intro to this market before we talk about BESI's Investor Day update. Here is our semiconductor industry flow. The top half of this flow chart is, of course, the actual chip design, and there in the middle is the manufacturing layer, especially the IDMs. And that would be companies like Intel and Micron, and then the contract manufacturers like TSMC that handle the manufacturing work for companies like NVIDIA and AMD and the like, the fabless chip designers on the right. But the other side of this equation is the manufacturing equipment space, the companies that enable these things to be made in the first place. Those are the wafer fab and chip packaging and assembly and test equipment there on the bottom. This is a critical choke point in the industry. And oftentimes when we talk about this very crucial part of the market, we're talking about these 5 companies here, what we call here at Chipstock Investor, the Fab 5. ASML, Applied Materials, Lam Research, Tokyo Electron, and KLA Core. And those are the biggest from top to bottom as measured by revenue. And in fact, these 5 companies totally dominate the wafer fab manufacturing equipment market. They make up something like 70% annual fab manufacturing equipment sales. At the moment, let's round it off. Let's call it $100 billion per year. You notice here in 2025, the trailing 12-month number of these 5 companies is like 106 billion. The reason for that is all of them have lots of service and software sales that don't count in that market total. So that's why they're bigger. But if you back that out, roughly 75 billion in sales for these 5 companies, just the manufacturing equipment itself, leaving a very small sliver for the rest of the players in this market. The Fab 5 have come to dominate this process step right here, especially those 4 steps in the middle: deposition, lithography, etch, and cleaning. And then also metrology. Of course, that's KLA Core and ion implantation. Applied Materials, a leader in that, interspersed through those steps. This is what's called front-end manufacturing or wafer development. That's when the silicon or some other semiconductor material wafer is being developed. Now, a less complex manufacturing step that hasn't gotten a lot of attention until the last few years is after the wafer has been developed. It's what's called back-end manufacturing processes. The wafer gets diced up into chips and then is packaged onto a circuit board with other chips, and then is ready for installation into your PC, your smartphone, your data center equipment, and what have you. Here's a look at what that market looks like. It's much smaller. It's well under $10 billion in total sales per year, and some of the Fab Five participate here, especially Applied Materials. But for about 5 years now, Applied Materials has actually had a very close relationship with one of the leaders in advanced packaging, and that is BE Semiconductor, or BESI. And in fact, over in Semi Insider, we've been talking about this throughout 2025 now, because Applied Materials actually purchased a more than 9% equity stake in BE Semi. So if you own Applied Materials, you actually already own almost 10%. So for those of you that are Applied Materials shareholders, know that you actually collectively own nearly 10% of BE Semi at this point. But they have this partnership to advance this packaging market. Applied Materials has a lot of process steps that BE Semi does not. And so paired with what Applied has, BE Semi making a lot of jumps technologically to push the boundaries of what's possible currently in advanced packaging. Okay, let's jump around to a couple of the slides from BESI's Investor Day update. I'll explain here just a little bit what they talked about, but if you like the technicalities of this stuff, definitely give that Investor Day a listen or a read. You can find the transcript of it over on finchat.io as well. So why is advanced packaging suddenly so important? For decades, the market has been focused on wafer development, and especially increasing the performance of those transistors and increasing the density of those transistors per chip. Transistors being the little on-off switches that create the ones and zeros that make software. So the reason why the industry is starting to pay more attention suddenly to advanced packaging is transistor density count has been slowing down since roughly about the middle of last decade. This is why some people like Mr. Jensen Huang have been saying Moore's Law is dead. Moore's Law being, of course, Intel's product roadmap, where they would roughly double the transistor count every couple of years. And in tandem with that, the cost for manufacturing those transistors on a per transistor basis actually stopped decreasing and even started to increase about 2017, 2018. Some other effects here that create some problems with wafer development. It's not that wafer development is finished. There are still advances that can be made here. Casey and I did a video earlier this year about the next 15 years of wafer fab production and logic chip production, talking about what is going to happen with transistor technology over the next decade and a half, basically the whole industry's roadmap. Check that out. But hopefully you get the idea from this slide here. These companies can't just simply rely on the old Moore's Law to increase performance and lower the cost to performance ratio anymore. Something else is needed. And that's where advanced packaging comes in. And advanced packaging, oftentimes this term is getting thrown around these days. It's actually a very broad term. There's a lot of different advanced packaging steps. Some investors will refer to this as chiplet technology. Essentially, this is what it looks like, though, is figuring out new ways to package and attach these chips to the circuit board or the package with other chips. And chiplets is one way. So disaggregating some of the functionalities of what used to be a single monolithic die there on the left, splitting that up into different chips that handle different processes. And this chiplet movement is expected to get more complex there on the right. So advanced packaging, figuring out how to attach these things efficiently and accurately, getting more important. And the precision needed in placing those chips into their package is also getting more important. You see here now 100 nanometer precision on the bottom right. And some of BESI's machines are now looking at something like 50 nanometer precision, not like the 3, 5, 7 nanometer size that ASML and Applied Materials in the Fab 5 are able to pull off with wafer development, but you get the idea. We're headed that direction with advanced packaging. So as a result, BESI sees a lot of semiconductor manufacturing capital expense moving towards packaging in the next 5 years. And of course, this is being driven by AI and the need to get AI compute more efficient, more power efficient, getting it to be able to compute more numbers for less power per unit of compute. And so this is where BESI comes in. They also shared some of the advanced packaging fabs that are in progress or planned right now. And of course, the big one, TSMC, we reshared our video from last summer over the weekend. We're going to link that in the description below as well. We talked about last summer how TSMC had actually purchased an LCD screen fab in Taiwan for something that's called glass substrates. This is a new advanced packaging technology. More on that in the video from last summer, but TSMC already positioning itself as a leader in advanced packaging manufacturing. See that planned capital outlay there, well over 30 billion. And the other companies, Intel and Samsung in particular, kind of a distant second and third place with their capital outlays in building out these advanced packaging fabs. Now, what does advanced packaging actually look like? Let's jump back to BESI here and some of the different packaging steps and different packaging solutions that companies need, especially in accelerated computing and AI. Hybrid bonding. This is the big one for BESI and the very precise packaging technique that enables 3D stacking of some of these chiplets. What is hybrid bonding? Now, if we zoom in on some of the side shot pictures of this accelerator package, you'll see these little tiny, essentially what look like little solder balls in between these stacked chips. So on the left, you have co-packaged optics. NVIDIA talked a lot about that back in March. HBM, high bandwidth memory, stacks of chips, especially between the stacked DRAM chips and then the logic chip at the very bottom. And then also in the accelerator package itself, what we have pictured here is an XPU system. So something designed by Broadcom or Marvell as an example. You can see these tiny little points that sit between these different chips stacked on top of each other and their substrate. Because these chips are stacked atop of each other, they have to be very precisely aligned so that they function properly, so that the data and the power moving between them, those interconnects line up. So that's hybrid bonding. This is the big market for BESI, but they've also gotten into some new stuff as well. Thermocompression bonding, or TCB. This is another technique used in chiplet stacks. This is a market that Kulik and Solfa competes in. There on the top right, we also have flip chips and fan-out packaging for things like chip on wafer or COW. That's like TSMC's CoWoS and fan-out packaging manufacturing techniques. Flip chip, older technology, but BESI continues to increase the capabilities of flip chip because a lot of semiconductor chips will just need to be packaged in a less precise manner. They're not going to need the most advanced hybrid bonding. So in tandem with a lot of these new packaging techniques that are needed because of accelerated computing and AI, and we have the coming wave of new advanced packaging substrates like the glass substrates I alluded to earlier, BESI has come out with some new equipment to help its customers like TSMC and like Intel, Samsung, and so on take advantage of this advanced packaging that can help continue to increase the performance of chips and computing technology and increase the power efficiency as we move more and more into the accelerated computing and AI era. So what does that all mean? Well, here's BESI's new financial targets on the right. The previous financial targets are on the left, but let's take a look at what they're now expecting. 1.5 to 1.9 billion euro on the high end. This is what's expected at roughly year 2030, so in another 5 years. At least 40% of the total addressable market that they expect to gobble up. Of course, Applied Materials, the other big one there, and they have a partnership. So suffice to say, BESI is probably in pretty good shape in dominating this part of the wafer fab. They expect to see a little bit of an increase in gross margins, and as a result, a pretty sizable jump in operating margin. They've done a lot of R&D. That's now behind them in getting those new pieces of equipment ready. So long story short, BESI expecting not just revenue growth, but also profit margin increases. Here's a chart from our friends at FinChat. Here's where BESI is at over the last trailing 12 months. 605 million in revenue. Of course, they're in the midst of that downturn, looking for the heat up in the semiconductor manufacturing market through the second half of this year and into 2026. And their operating margin currently at 32%. Even at the peak a few years ago, they had just barely surpassed 40% operating margin. Their new target, upwards of 55% operating margin, paired with at least a double in revenue, if not maybe even a triple in revenue over the next 3 years. Suddenly, BESI looks like it could be one of the fastest growing companies in the semiconductor wafer fab equipment sub-industry. This looks like a really compelling story after this Investor Day update. One more slide here from FinChat. BESI has a solid balance sheet even throughout this downturn. They've managed their cash well, nearly 700 million euro on hand, and debt of just 525 million euro. So pretty good balance sheet, especially for a manufacturing-based company, a highly cyclical one at that, to be able to help them execute on that vision over the next 5 years. We're looking at possibly a triple in revenue over the next 5 years if BESI's financial targets can be pulled off, and a big increase in operating margin to 40 to 55%. Free cash flow should be somewhere in that range as well. So if you pencil this out, currently BESI's valuation right there in the middle of this chart, 54, 55x trailing 12-month PE, based on next 12-month expectations from Wall Street, about 57x price to earnings. Wall Street probably has not updated these figures yet, but I'm just going to kind of ignore those here for our purposes. Now, those valuations look ridiculously high, but remember, BESI still in the midst of that downturn, hasn't really hit that new cycle of growth. So of course, the multiples look very high, but if you pencil this out, based on that 2030 financial target, this stock is trading for perhaps somewhere in the range of 10 to 15x free cash flow at the midpoint of their guidance. Maybe they'll be able to deploy some cash, make some acquisitions to accelerate that growth a little bit more. We'll have to see how it plays out, but certainly a much more reasonable looking valuation today than if you were to look and base your assumptions off of the trailing 12-month numbers. So BE Semi, one definitely to take a look at. We've done some work on this before. We have some videos on BE Semi, and of course, join us over on Semiconductor Insider, where we're talking more about this. We are personally mostly content with owning BE Semi via our position in Applied, but BESI is a pretty compelling looking small cap company in this emerging space of advanced packaging. being driven by new requirements for AI and accelerated computing. So check it out. Hope to see you over on Semi Insider. We'll be reviewing this and, of course, taking a look at our revamped small bets, small cap basket portfolio here at the end of June and through early July. Take care, everybody. Have a good week.